So what is a good credit score? In my previous videos, I stressed the importance of monitoring your credit and what to look for when you're monitoring credit. Hopefully you're doing it at the very least on a monthly basis. So when it comes to scores, scores can range from 300 to 850. This applies both to FICO scores as well as Vantage scores. You'll see FICO scores most commonly. You'll see Vantage scores, say, for example, on um, creditkarma.com. But FICO scores have been around since 1989. Vantage scores, that system was created in 2006. Something like 90% of creditors are going to use FICO scores. Good to know both. Good to know what multiple versions of your credit scores look like. And if you're looking to buy a home, if you're looking to rent your first apartment, get insurance for that new place you're going to call home, if you are looking to open a credit card, take out personal loan, take out student loan, if you're trying to get insurance, many insurance companies will use a credit-based insurance score. If you're trying to land that dream job, and especially if it involves finances of the company or maybe clients' finances or personal data, you're likely going to want to take a look at your credit, make sure you're in good order yourself. If the job you want is going to involve in some type of licensing with a regulator, it's a financial license, they're probably going to want to pull your credit as well. For example, what I do for work as a loan originator, when we get our licenses renewed each year, there's typically a requirement to review our credit wherever we're going to be licensed, whatever state we're getting licensed in. So scores range 300 to 850. In my time in the business, since 1995, looking at thousands of reports, can't recall when I've seen a perfect 850 score. I will sometimes see triple 800s. That's to say a client has 800s across the board with Equifax, Experian, and TransUnion. Now, on the low end of things at 300, it's seldom that I see scores that are below 500 these days. And sometimes I'll see something in the 400s, but I can't remember ever seeing scores below 400. But look, that range exists for a reason, from 300 to 850. I'm sure that they're out there. Now, the average score in 2022 for FICO scores was 714. In 2023, the average Vantage score was 701. Since 2011, the average FICO score has increased from 689 to 714 in 2022. And I think that is in large part due to consumers have way more access to credit monitoring than ever. There's so many different platforms to choose from, and plenty of tools to help educate about how credit works. So it's great to see scores improve like that. Great to see the benefits of credit monitoring. Now, 740 and above is generally considered a very good score. Scores below 600 are considered poor. And credit scores are used to assess risk. When you apply for credit, how likely are you to repay the debt? And are you going to pay on time? Is there a default risk that might result in, if it's a credit card, maybe a charge-off status? Or if you're borrowing money to buy a house, refinance a mortgage, would there be likelihood of foreclosure? And credit scores are very good indicators of future risk. They've had many decades of this with the scoring system to determine risk. So anything you can do to learn about the credit scoring process will certainly benefit you in the long run when it comes to your scores and what you pay for credit. Now, as we get older, Experian tells us that our scores tend to improve. Easy to understand why. Our incomes tend to rise as we get older. Also, we have a longer credit history. And then we also make better decisions when it comes to credit. We learn from our mistakes. We use credit responsibly. We don't max ourselves out. We don't take on more than we can afford. We pay bills on time. And to illustrate this, the average score for millennials is at 687 versus the average score for baby boomers is 742. And those are the two biggest segments of our population. The millennials are now at the top segment of our population. So what goes into credit scoring itself? Well, you have 5 factors. You have your credit history. So are you paying bills on time? If you've had lates, how recently were those lates? Were they in the past 12 months? Were in the last 5 years. Look, it's not uncommon for someone to have some lates at some point. We're all human. You could just simply forget, or maybe you just didn't have the funds to pay the debt when it was due. Things happen, but you can always correct the problem and and make it so that you don't let it happen in the future. Good way to do it is simply set up auto pay. That way you don't have to worry about if you paid on time or not. Next on that credit score pie chart is your use of credit, the balance to limit ratio. And we typically find this with credit cards. It could also apply to a line of credit. So if you have a $10,000 limit or a $100,000 limit, what you carry in balance, that balance to limit ratio is going to play a big role in scoring. So if you max out, if you go over your limit, you are likely going to see a drop in score. If you're carrying relatively low balances, then you should see improvements in score. Now, you don't want accounts necessarily to go dormant. You have to use them sometimes to show that you have good spending habits and ability to pay those debts off. So don't necessarily just leave accounts at zero all the time. Next on that list, again, credit history. So credit history does play a role in scores, and the longer you have history, especially if it's been blemish free, will certainly have a good impact on your score. Next on that pie chart is the segment for new credit. And that's where we find credit inquiries. So many people, I think almost everyone I talk to who's looking to buy or refinance, they're going to ask me, hey, is this inquiry going to hurt my score? Well, short answer is no. Credit inquiries over time may impact your score, and I think it really depends on the number of inquiries you've had. Okay, so if you have the normal number of inquiries, and what's the normal number? Well, that's a good question. Well, you can't have credit without having inquiries, but if you're constantly applying for credit, it may be deemed that you're taking on too much, more than what you can afford to pay back. So don't sweat the inquiry here or there. Look, I often work with clients on improving score, and I always suggest they get on MyFICO, the same platform that I use, because knowing that MyFICO, to my knowledge, is the only one that provides consumers the ability to see FICO 542, the mortgage scores, and that way they can monitor on their end to see movements in their score, if it's increasing, if this is a matter of just getting their score to the minimum required for a program, or to get into a better pricing category when it comes to interest rates or PMI, private mortgage insurance, if they're utilizing conventional financing. So if they're on myfico.com and they can see their FICO 542 and they see an increase in score, and we pull the same day, we see the same scores that they see. It's very much real time. So last on the list there is your mix of credit. And if you have a diverse mix of credit, maybe you have a mortgage and an auto loan and a few credit cards, maybe a student loan, those are all a good mix of credit, and it shows your ability to manage multiple accounts, pay your accounts responsibly, use them responsibly, not overextend yourself. So what's the minimum scores required for financing programs? Well, in Govy loans, FHA, VA, USDA, those are what we call Govy loans. Typically need a 580 or better. On conventional financing, Fannie Mae, Freddie Mac, typically need a 620 or better. If you're a first-time buyer looking for down payment assistance, many first-time buyers inquire about down payment assistance. Depending where you're looking to buy, the state bond programs will determine your minimum score required. And in Maryland, the Maryland Mortgage Program, it's 640 or better. In Pennsylvania, it's 660 or better. And in Virginia, it's 620 or better. If you're outside conforming loan limits, so if you're in jumbo financing categories, so conforming loan limits vary depending where you're looking to buy. They vary with each county and each state. And if you're in that jumbo category, you typically need a 660 or better. And if you're looking at any of the non-QM, non-qualified mortgage options, bank statement loans, asset-based lending, or investor cash flow, also known as debt service coverage ratio, typically need 660 or better. Quick note on joint applications, whether it's 2 people or 10 people on a mortgage application, everyone collectively, the lowest mid scores, going to be what's used to determine whether or not the application meets the minimum required for a program, also what the interest rate pricing is, and private mortgage insurance if it's conventional financing. And ultimately, the mid credit score is going to be likely used by automated underwriting to determine what debt ratio threshold will be allowed for that application. Lower credit scores, we tend to see a lower debt ratio tolerance than versus higher credit scores where we see a higher debt ratio tolerance. So it's ultimately going to play a role in just how much you can be approved for. So what's best practices with credit scores? Well, again, monitor your credit, but take time to learn how credit works. Take the time to know how scoring works, what you can do to improve your scores. There's some great tools on myfico.com, on creditkarma.com, the two monitoring services that I utilize, but there's other ones out there. And studies do show that consumers who monitor their credit do see significant improvement in credit. But look, 800 scores don't happen overnight, and maybe one day you could hit 850. It's not going to happen in a week or a month, or maybe not even in a year, but if you continue to work at it, it will pay off. Higher credit score typically results in paying less interest, paying less for finance charges, maybe being approved for a higher loan amount so you can buy that dream home or dream car, or maybe ultimately land that dream job you've always wanted. So if you have any questions at all on credit, if there's anything I could help you understand better when it comes to credit reports, credit scores, please reach out. Just click on that link tree in my bio.